What up, Hyperchange? Welcome to another episode. Today we're talking about some news coming from Tesla this morning. New company update. They have fired 7% of their full-time workforce. A bunch of other interesting tidbits in this email from Elon Musk that was posted to the company blog. As I'm recording this episode, the stock is down about 11% to $310 per share. So the market is not loving this news. So we're going to go through the highlights of this letter from Elon, and then I'm going to give you what I think. So this is the exact transcript of an email that was sent to Tesla employees. It starts out, as we have all experienced firsthand, last year was the most challenging. However, despite all our efforts, it was the most successful year in Tesla history, yada, 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 like our accomplishments are awesome. Okay, nothing there. And then they basically set this up that's like, looking at our mission of accelerating the advent of sustainable transported energy, which is important for all life on Earth, we face an extremely difficult challenge, making our cars, batteries, and solar products cost competitive. Essentially, Elon goes on to say they have to try harder than every other entrenched automaker to be able to win, and that's why it's such a difficult road. And then he goes, look, in Q3 last year, we were able to make a 4% profit. While small by most standards, I would still consider this the first meaningful profit in 15 years since we created Tesla. However, that was in part the result of preferentially selling higher price Model 3 variants in North America in Q4 preliminarily. Unaudited results indicate that we have again made a GAAP profit, but less than Q3. This quarter, as with Q3, shipment of higher price Model 3 variants, this time to Europe and Asia, will hopefully allow us with great difficulty and effort and some luck to target a tiny profit. So this is, to me, the juiciest and most interesting part of the letter, which he says, look, it looks like they made another GAAP profit in Q4. The quarter just ended. That's huge, although he does know it's a little bit tinier than the 300 or so million profit in Q3. So I'm guessing it looks like Tesla's going to report somewhere between $0 and a $300 million profit for Q4. That's good news. The company, it sounds like, is profitable for 2 quarters in a row. So that got buried in the letter, and I think that's a bright spot. But the other thing that's not so bright maybe is basically that in this Q1, the quarter that we're in, he said we're targeting a tiny profit, but we have to it sounds like it's not in the bag. And this kind of caught me by surprise because I think okay, well, once they start selling the super high price versions of the Model 3 to Europe and Asia, those are going to be higher margin revenue. They should be able to produce a significant profit in Q1, but it doesn't look like that's the case. Anyway, let's keep going through the letter. However, starting around May, we will need to deliver at least the mid-range Model 3 variant in all markets, as we need to reach more customers who can afford our vehicles. Moreover, we need to continue making progress towards lower price variants of the Model 3. Right now, our most affordable offering is the mid-range 264-mile Model 3 with premium sound and interior at $44K. The need for lower price variants becomes even greater on July 1st when the US tax credit again drops in half, making our cars $1,875 more expensive, and again at the end of the year when it goes away entirely. Sorry for all these numbers, but I want to make sure you know the facts and figures and understand the road ahead is very difficult. This is not new for us. We have always faced significant challenges, but it is the reality we face. There are many companies that can offer a better work-life balance because they're larger and more mature, or in industries that are not so voraciously competitive. Attempting to build affordable clean energy products at scale necessarily requires extreme effort and relentless creativity. But succeeding in our mission is essential to ensure that the future is good, so we must do everything we can to advance the cause. As a result of the above, we unfortunately have no choice but to reduce full-time employee headcount by 7%. We grew 30% last year, which is more than we can support, and retain only the most critical temps and contractors. Tesla will need to make these cuts while increasing Model 3 production rate and making many manufacturing engineering improvements in the coming months. Higher volume and manufacturing design improvements are crucial for Tesla to achieve the economies of scale required to manufacture the standard range 220-mile standard interior Model 3 at $35,000 and still be a viable company. There isn't any other way. To those departing, thank you for everything. For those remaining, many challenges ahead. I believe we have the most exciting product roadmap of any consumer product company in the world. Full self-driving Model Y, semi-truck, Roadster on the vehicle side, Powerwall, Pack, and Solar Roof on the energy side are only the start. I'm honored to work alongside you. So a little bit of a bright spot at the end, saying how excited the product offering is. But the juice of the email that I just read there, the bulk of it sounds like U.S. demand is falling off a cliff, is what it sounds. This is me reading in between the lines, or not falling off a cliff, but just not where they want it to be. And so because of this, they need to streamline their operations. And so I'm a little bit confused. This news totally caught me by surprise. Tesla in June of 2018 announced a 9% layoff to get to profitability. And that kind of caught people by surprise. But, Tesla is growing absurdly quickly. This was a company with only about 10,000 employees 3 or 4 years ago. Now they have over 40,000. So if you quadruple your employee base in just a handful of years, you're going to have to trim the fat every so often. And so that's what they did in June. And I was actually a fan of that. They got leaner, and it is ironic to note that the most times company stocks actually go up when they announce layoffs, because it means that they're spending less money and their profits are going to increase. Like Ford stock and GM stock, usually automakers go up when they announce layoffs like this. But this Tesla stock went down because I think it's an unusual layoff. It's signaling like this weakness in the business model that we didn't expect. You can't say that they're cutting the fat again when they just did that 6 months ago. Like, that is the concerning part to me, is making big layoffs like this twice within a 6-month period. Like, seems like something's off. And it's even more confusing to me because I'm like, okay, we reported profit in Q3, and then deliveries, they've already reported Q4 deliveries, which are a record. They beat Q3, and they already say they're going to be profitable in Q4. So, and I would assume that production and revenue will continue to grow in 2019. So why make these layoffs? So honestly, I'm just confused. But Elon basically is saying in the letter, like, we need to get out the cheapest Model 3. The only way we can get out the cheapest Model 3, the $35,000 variant, profitably is by making these layoffs. And so that's why we're doing it. So that is what it is. So that's going to result in about 3,000 people that are going to be laid off without a job. Yes, this will reduce Tesla's operating expenses going forward, so that's a good sign. But this is just leaving. I don't have all the answers for you. I wish I had a better explanation of why this was happening, because honestly, it just doesn't add up to me, unless there was 7% of Tesla's workforce that was just like lazy and incompetent, but they just trimmed the fat. So that doesn't make sense. So I don't get why they're firing people when they need to ramp production. They're increasing sales. Deliveries are on record. They have all these new products coming out. Like, this seems to be the time, like, to keep as many employees as you can. And if anything, Tesla's already been understaffed. I made a video about Tesla's biggest weakness being their customer service after Sean Mitchell made his video, and then Like Tesla made another video. Like, all the Tesla tubers, even the financial education channel, which is a bigger, much bigger, broader stock market channel, like, they all have been talking about this issue where Tesla appears massively understaffed in customer service, and it's been a growing problem. And the consensus among the Tesla tubers has been Tesla should start hiring a lot more people in that department. So to wake up today and see that they're firing a ton of people, I don't know what divisions they're going to be in, but like, that's not a good sign. It's probably going to put even more pressure on that service system, which is already strained. So that to me is not the good thing. I personally am on one about this, and I've mentioned this in a lot of videos, that I think Tesla is making a lot of mistakes because they're trying to cater to be profitable to Wall Street, and that is forcing them to force profitability on their business model before their business model has hit maturity, when it really should be profitable, and it's not the natural flow of the business cycle. And so they're cutting corners, like having less customer service and doing so to be profitable, which is great. Wall Street loves it because they're showing a profit, but guess who hates it? All the brand new customers. Guess whose brand is getting hurt? Tesla. And so I'm worried that the service is going to continue to get worse. We're sort of down this downward spiral where it's like customers are going to get even more pissed off. The word of mouth is going to get even worse. So then even less people are going to buy cars. And then it's just, I don't think this is the way to go. Like, if I was Elon Musk, if I was the head of investor relations, if I was the CFO, and if I was in the room with them, here's what I'd say. Guys, look, we need to do a 180. Screw Wall Street. Like, the analysts who are complaining about our profitability and the shorts who are tweeting about it aren't driving the market. We hit a 50 billion valuation without really ever making a profit because the market was validating our progress on our business model and understood that we weren't at maturity. And so the money who's moving the market isn't forcing Tesla to take a profit. I'm not meeting with Bailey Gifford or Ron Barron or all these big, Tesla longs, but if I were, I bet they'd be saying the same thing. We'd rather Tesla lose money, but take care of its customers so they can keep word of mouth. Tesla doesn't do a drop of the traditional advertising. It's all word of mouth. We need to keep that word of mouth amazing, and that starts with amazing customer service, and it's already understaffed in that department. So these layoffs, to me, indicate that this whole problem that we've been seeing could get worse. And so that's the reality. I'm keeping it real with you guys because it's Hyperchange. It's my channel. I'm a Tesla shareholder. I haven't sold a share. This isn't changing my long-term view. I'm actually hoping that I can get paid in a couple weeks and then buy some more stocks. I'm kind of hoping it stays down personally. But I will say, this isn't a good sign. I don't know. I don't know how to explain it to you. 2 layoffs in 6 months of this magnitude, I don't know. I don't have all the answers, but something doesn't feel right, and I'm worried all Tesla's problems about being understaffed and the chicken with their heads cut off culture is going to get way worse. And so that is what it is. The stock's down 11%. I wish I had more feel-good notes to make, but that is what we're looking at. So I'll keep you guys posted on the channel. Tesla's quarterly results are coming up in a couple of weeks. We'll get a lot more info then, so I'll be covering it. Make sure to tune in. This is Hyperchain's. Huge shout out to the Patreon producers, supporters, signing up for the newsletter on our page. Definitely check that out. I'll see you guys next time. Peace.